The small business lenders who have kind of missed, the surge have got to figure out a way to relate to those customers on a one-to-one basis to continue to earn their business.
When I look at some of the headlines around what's happening in the alternative lending space and then business financing in general, I see a lot of headlines with the tech giants, right, that are dominating the conversation. So guys like the PayPals, the Shopifys, the Square, companies like that have massive captive audiences, that have access to a huge amount of businesses that are using their platforms for a variety of reasons. They have an abundance of data. Can you talk about what you're seeing in terms of trends in the financial space and how that landscape is changing with these big giants coming into the game? And what does that mean for the smaller lenders and funders?
Well, it's been interesting to watch, mainly because I started watching it when I was working in it back in 2006. And back then it was just, it was banks. And then there was a handful of non-bank business lenders. And that was it. That was around the time that peer-to-peer lending and the consumer side was just starting to come out too. But that wasn't this huge, big thing yet. And what's interesting about the evolution is that things kind of go back to the way that they were. In the consumer lending space, what we've seen is that peer-to-peer in the United States, peer-to-peer lending has kind of came and went. And it's now back in the banks. The banks are really doing the online lending now for the most part. It's almost like predictable in a way, right? Because the banks see what the online lenders are doing, and they see it as they're like, oh, we could be doing that. And it just takes them a really, 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 really long time to catch up.
But are the banks lending to the same demographic as the non-bank lenders of the past, or are they just using technology, but they're still serving that higher prime type of customer?
Yeah, so that's a good point. So banks are still serving the higher, prime customer for sure. And you still have the subprime and mid-prime customer that is still underserved. The downside is that peer-to-peer lending, as it existed before, isn't really there to help them. And so you have alternative lenders who are filling that gap. They're just not peer-to-peer based. They're not as unique in the way of how they operate, because a lot of them have to have a relationship with the bank, or they have to have some sort of bank charter or something. Yeah, but you typically see the banks only working with the prime bracket, and they use technology to do that. Now, on the business lending side, it's a whole different ball game over there, and that's really been the area of focus that we've had at GBank for a long time, is the business-to-business finance side. And it's so much different over there because it can't be as easily commoditized. In consumer lending, you can look at somebody's income, you can look at their credit score, and you can look at a couple other demographics that are readily accessible, and you can make a credit decision really quickly without ever needing to speak to them. You can basically just say, statistically, these are the odds that they're going to pay back. That's how the whole FICO scoring system even works, right? But on the business lending side, it's not that easy. You can't look at somebody's credit score and say, this is how a business is going to perform. It might be reflective of the owner, but it's not reflective of the sales or the future of the business. And then if you have multiple owners of the business, then it becomes even less important. And so you had these alternative non-bank business lenders from the beginning saying, we're going to fill the gaps. The banks don't know how to underwrite these types, and they don't really want to lend to them because it costs a lot of money to figure it all out. And it can be too cost prohibitive to do a loan under, like, let's say 100,000 or even under $1 million, because they need to figure out who the owners are, what are they like, what's this business like, let me see their past tax filings, let me see their profit and loss statement. And not every business is reporting a profit, because a lot of them are reinvesting their income to grow. Mm-hmm. But if you're a bank, banks look at that as a bad thing. They're like, oh, you're not profitable, right? And so you had all these small business lenders filling the gap. And it was really primarily driven by individuals, brokers who would find businesses who needed money that banks weren't serving. And they would do this by cold calling them, direct mail, and being found on Google search. Well, now you have these tech companies that say, well, we have access to a lot of business owners. We do their payments. We do their point of sale. We do their payroll. Might these people be interested in this type of financing too? And it turns out a lot of them were. And some surprise I've had over these years is watching some companies not realize the scalability of non-lending platforms to turn into lending platforms. Mm-hmm. Like a payments company turning into a lending company for me was an obvious outcome. But some pure lenders didn't see it. And you got companies like Square, you know what I mean? PayPal. Now we got Stripe. All these companies turned into massive lending companies. And now I think what's challenging for the non-payments companies, the non-tech companies, is that they don't have that scalability. And they're forced to acquire customers with a real cost. Whereas if you're a payments company or a payroll company, your cost of acquisition for a lending customer is nothing. You have a cost of acquisition, but it's for your primary business, and the lending cost acquisition is nothing. If you're a pure lending company or funding company, whatever it is, you have this enormous cost of acquisition, for that one type of product that you offer. That's a huge disadvantage. And so these companies have scaled really quickly. And I think it's, especially with COVID, it's really highlighted the disparity between what a tech company can achieve in lending versus a non-scalable, non-tech company.
So where do we go from here? I mean, what happens next?
The small business lenders who have kind of missed, the surge have got to figure out a way to relate to those customers on a one-to-one basis to continue to earn their business. Perhaps we're going to have the same issue that we had in consumer lending, and to an extent we are having it, in that the scalable tech companies, they don't like to take enormous risks because they need to do things that scale. And so it's easy for them to count out the mid-prime and the subprime customers and focus on the prime. Although it's not entirely that way. They will take more risk than a bank will take, but they won't take a lot of risk. And so you still have this whole area where the non-tech companies can service the mid-prime and the subprime customers. But the problem is, over time, these tech companies could figure out a way to serve those lower tier customers, and you don't want to get too complacent.
Right.
They need to figure out a way to compete with that. And maybe that's by being human. Maybe customers will come to appreciate the human element and human touch of the sales process. Or maybe that's by finding out a way to be integrated into these tech solutions. So that if you're let's say a business owner and you're using Square to do your point of sale, and there's a button to get you pre-approved, maybe Square can't do it. But it would be really nice if there was a backup plan where Square works with a third party that could do it. It's good for the Square customer that still got serviced. It's good for Square because they retained the customer and looked like a hero, but they didn't have to take the risk, and they could farm it out to another company who they could handle. So part of it is you need to think about how to live in that world of tech, even if you're not a tech company.